Hello, ladies and gentlemen. I'm the ACCA tutor. My name is Jerome Timkulu, and I'm very happy to take you through this week's lecture that is accounting for labor and overhead costs. As you know, these are my credentials. Okay. These are my credentials, and that's Jerome Timkulu. Okay, and available on this number, or you can send an email to me at this email or at transcarcs@gmail.com. All right. I'm sure you're going to enjoy the lecture as we go. Right, let's move. Accounting for labor, and we have to know the objectives of the lecture, because if we do not know these objectives, we might get lost. Okay, so by the end of the lecture, students should be able to explain, illustrate and evaluate labor remuneration methods, distinguish between direct and indirect labor costs, describe the procedures and documentation required to ensure the correct coding, analysis and recording of direct and indirect labor, describe and illustrate the accounting for labor costs. So these are the four objectives which we have to meet at the end of the lecture. Now, remuneration method. Labor costs can arise from number one, basic wage or salary, overtime premiums, bonuses, holiday pay, sick pay, and payroll taxes. Employee remuneration can be based on the following approaches. Number one, a constant weekly or monthly amount. This is easy to calculate. Labor costs would be remuneration per period multiplied by the number of periods. Let's say in every week you are going to be paid $80. If you are paid $80 per week, then if you worked for 4 weeks, then your pay would be $8 multiplied by 4, and this gives us $32. So you can see that this one is a bit easier to compute. Then we've got an amount based on hours worked, that is basis plus overtime. Okay, let's say you have worked for 52 hours. Okay, let's say in a particular week, the time allowed is 52 hours. Okay, and a basic week. Okay, in this particular week you worked for 52 hours, but a basic week has got 40 hours, and at the rate of $10 per hour. $10 per hour. Okay, and overtime is paid at time and a half. Okay, you worked, time worked was 52 hours, but a basic week has got 40 hours. So which means if you work for over 40 hours in a particular week, then the extra hours are considered overtime, and the overtime is paid at time and a half. This means that you're going to earn, the time is the basic rate, the basic hours, and this half is the premium. That's the premium you're going to get. So if you work for 52 hours, then your basic pay, the basic pay would be the total hours worked which is 52 hours. Okay, 52 hours multiplied by $10, which is the basic hour rate. Okay, the normal hour rate. Okay, so you're going to be given 520 basic wage. Then the overtime premium now. Overtime premium. It's going to be the extra hours. That is it's going to be based on extra hours. So that's 52 minus 40 hours, because a normal week has got 40 hours. Okay, so multiply by $10 per hour, multiply by 50%, because we said that the premium is the half, okay, the extra from the time. So we're going to get here 60. That's your overtime premium. So the total pay becomes 520 plus 60. 520 plus 60 and becomes $580. That's your total pay. Now, okay, we've done that. Fine, we have done that. All right. Remuneration methods continued. Let's say in this situation, okay, an amount based on units produced, that is the piece work. Often there is a guaranteed minimum amount of pay so as to comply with minimum wage rate legislation. Okay, so here you are being paid based on output. Okay, under a piece work system, you are being paid based on output or units produced. So let's say minimum pay is 250. Okay, minimum pay according to legislation. So which means that whenever you hire somebody, you have to make sure that whether those guys worked or not, you're going to pay them 250, period. There are no negotiations, because the legislature knows that you are going to pay 250 if you employ somebody. That's the minimum pay. So, and you're also told that the piece rate is $3 per unit produced. So what would be the pay if 100 units were made in a week? So if 100 units were made, so that's 100 multiplied by $3 per unit, and the pay would be $300. But what if the total units produced are 8 units? So the pay would become 80 multiplied by $3 per unit, which is equal to 240. But we know that it is impossible to pay somebody 240, so you would be required to pay them the pay of 250, not the 240, because the minimum wage is 250. Now, an amount based on productivity. Okay, you'll be given in the examination the way the examiner wants you to attend to particular scenarios. So you just have to pay attention to the different bonus schemes which might be suggested by the examiner, and you just have to show them that you understand what they want. Okay, so let's say basic pay is $9 per hour for a 40-hour week, and normal production in that time is 120. Bonus is equal to 50% of the time saved on production paid at time and a third. What will be the total wage in a week in which 150 units are made? Okay, so we need to be systematic here. Okay, we need to be systematic. So let us determine the hours saved. Okay, because a normal week produces 120 at a 40-hour week. Okay, so this is the normal position. Okay, 40 hours, 40 hours, 40 hours is equal to 120 units. So how much hours when we produce 150 units? 150 units would require 150 over 120 multiplied by 40 hours, and we get 50 hours. So therefore 150 units is equal to 50 hours. Okay, 150 units is equal to 50 hours. But in this case, 150 units took how much? 40 hours. So time saved is how much? Time saved is 10 hours. So 10 hours were saved. But our bonus is paid at time and a third. Bonus is equal to 50% of time saved on production. Bonus is equal to 50% on time saved. So 50% of 10 hours multiplied by 50%. So you can see that our bonus time is just 5 hours. So what is our basic pay? Basic pay is equal to the normal 40 hours plus 5 hours here, the 5 hours we are talking about, okay? Multiply by $9 per hour. And you can see that the basic pay is equal to $405. Then the bonus now is equal to 50% multiplied by 10. Okay, multiplied by 10. All right, we could just have said 5 hours, doesn't matter. Okay, 50% multiplied by 10 multiplied by $9 per hour multiplied by a third, 1 and a third. Okay, and this gives us 60. Okay, so we add up and we get the total pay of 465. Okay, what about in a situation where we are given an initial amount plus a bonus? Here, for example, the bonus could be part of a profit share. Instructions would be supplied to you by the examiner. All right, let's tackle this situation. Employees are paid $6 per hour for a standard 40-hour week. Overtime is paid at time and 1/3. The employee is expected to make at least 8 units in a week. And to encourage productivity, each unit is in excess of 80 will generate an additional payment of $5 less and overtime premium that would relate to the time the additional unit would normally take. What is an employee's wages in a week in which 90 units are made and the employee works 44 hours? So we have to take note here that each unit in this scenario, each unit takes Okay, 40 hours divided by 80. Okay, because we are told employees are paid this much for a standard 40-hour week. Overtime is paid at time and third. Then the employee is expected to make, in this particular, they are expected to make 80 units in a week. So 40 over 80, that's 0.5 hours. Okay, the week has got 40 hours and 80 units are produced in that time. So each unit takes 0.5 hours. Okay, so the basic wage for how much? What is an employee's wage in a week in which 90 units are made and the employee works 44 hours? So 44 hours, 44 hours. Basic wages for 44 hours is about 44 multiplied by $6 per hour. Okay, $6. And we get how much? We use a calculator, that's 264. Okay, then we have to consider the overtime premium. Okay, and we know the normal week takes 40. Okay, it's a 40-hour week, but we took 44 hours, so there was an extra time of 4 hours. Okay, the extra time, that's 4 hours paid at a time, that is $6 and a third. $6, okay, by the third, and we get, if we use our calculator, we get cross here 3, 2 multiplied by, that's 8. Okay, let's reread the scenario again. Employees are paid $6 per hour for a standard 40-hour week. Overtime is paid at a time and a third. The employee is expected to make at least 8 units in a week, and to encourage productivity, each unit in excess of 8 will generate an additional payment of $5 less an overtime premium that would relate to that time the additional unit would normally take. Okay, so the extra units, let's talk of the extra units. Extra units, okay, a normal 40-hour week takes, produces 8 units, okay, 8 units. But in this case, 90 units were made. So the extras were 90 minus 80, that's 10. So 10 units at how much? At $5. Because we are told that any unit in excess of 80 will generate an additional payment of $5. Okay, so that's 10 multiplied by 5, we get 50. All right, then the overtime premium associated with these extra units, overtime premium associated with extra units, with these extra units, okay, is equal to 10, okay, the 10 being the extra units, okay, multiplied by 0.5, because we are told here that each unit takes 0.5 hours, so that's 0.5 hours multiplied by the time rate of $6 and a third. But remember, this figure, we get $10, which should be deducted, because we are told here less any overtime premium that would relate to the time the additional units would normally take. So this is why we are deducting here, and we get our $312. So easy, isn't it? Okay, there we've got everything there. Now let's move on to gross and net earnings. Gross pay. This is the total amount earned by the employee. After doing some work, you earn something. But doesn't mean that this does not mean you are taking this home. The amount of money you have earned, but doesn't mean that that's the amount you're going to take home. Okay, you're not going to take that amount. You're going to net pay. You're going to take home the net pay. Okay, the net pay is the amount you're going to take home. All right, the amount paid to the employee after the employer makes deductions for income tax and other statutory obligations. So total labor costs to employer is equal to employee's gross pay plus any additional payroll taxes and perhaps pension costs that the employer has to bear. So we are given that example here. The example here, an employee is paid at the rate of $10 per hour. Tax and other deductions amount to 25% for weekly income in excess of 100. Okay, in excess of 100. Employer payroll taxes are 10% of gross wages. If an employee works 38 hours in a week, what are the employee's gross pay, net pay, and the total amount that have to be paid by the employer to the tax authorities? Okay, the gross wages is equal to 38 multiplied by 10, and you get 300. Okay, because this guy works 38 hours, and we are told that the hourly rate is $10 per hour, so that is 38 multiplied by 10, and get that one. That's the gross wages. Then tax and other deductions. Tax is levied at 25% for weekly income in excess of 100. So anything above 100 is going to be taxed. So for this guy, that's 25% multiplied by 308 minus 100, because 100, anything 100 and below is not going to be taxed. So that's 308 minus 100, that's we get 70. Okay, then the net pay becomes 38 minus 70, and we get net pay of 310. Then the payroll taxes. These ones are going to be borne by the employer. So that's 10% of gross pay. Okay, 10% of gross pay of 380, that's $38. So the total payments by the employer to tax authorities would be $70. Okay, this because they have deducted the amount from the employee. Okay, and this is their own obligation, so they have to take this money and remit it to CIMA as $108. Are we together? Now, an employee is paid at an hourly rate of $7 for a 35-hour week, with any overtime hours paid at time and a half. During week 22, the employee worked for 41 hours. The income tax to be deducted was $55. The employee's benefit contributions for the week were $28, and the employer's benefit contributions were $29. What is the employee's net pay? So we just have to go systematic again. Okay, gross pay. All right, gross pay. We are told that this guy worked for 41 hours, so that's 41 multiplied by $7, because $7, that's the charge per hour. Okay, then we get how much? Let us put the dollar sign here, so we get to 87. Then we're also told that this guy, his normal week is a 35-hour week. So the excess is 41 minus 35, that's 6 hours. Okay, 6 hours. This should be the overtime. 6 hours multiplied by $3.50. Okay, we are given this statement that overtime is paid at time and a half. Okay, so the overtime premium is just the half of $7. Okay, that's $3.50. This is why we put the $3.50 here. Okay, don't be confused. The $3.50 is just the half part, because although we know that the normal week is 35, okay, the extra, the time element has been considered here. This is why we took all the hours, the 41 hours, okay, the time and a half issue has been catered for here. So the 6 hours from 35 to 41, the basic component. Remember this. When overtime is done, if you do overtime, there are two amounts there. There is basic pay. There's basic pay and overtime premium. Okay, there's basic pay and overtime premium. Please do not be confused there. So here, this is only the premium. Okay, this is the overtime premium. Okay, the basic element has been catered here, because we know that in this 41 includes the normal 35 hours. 35 hours and the extra 6 hours for the overtime. So the basic pay element is the 6 hours. This is the basic pay from the overtime worked. Okay, all right, so don't be confused. So here now, the 6 hours here are now being considered for the overtime premium. So if we multiply by 350, we get 21 bucks. Okay, so our gross pay in total, okay, let us just say total gross pay, and this becomes 308. Okay, less the taxes, the income tax, less taxes the employee has to pay, and we are told that income tax to be deducted was 55. So let us just deduct from this guy's salary 55 for tax, and then also the employee's benefit contribution for the week were 28 bucks. Okay, so 28 bucks. That is employee benefits. Benefits contributions. We are told that they were 28. So he has also has to contribute. He has also has to contribute. He also had to contribute 28 bucks to pensions. Okay, so his net pay should be 225. Okay. So this figure here was just to trick us, this statement, because when we talk of the employee's net pay, we are not worried about what the employer is going to chip in on his behalf, on the employee's behalf. So we are not going to consider the employer's part. So that's the computation there. Okay. Now, as far as the employer is concerned, the cost of employment is the gross pay of the employee. Although the employee is only paid the net amount, the employer must pay the deductions from the gross pay for income tax and employees' benefit contribution over to the relevant authorities. All right. There is also a further cost to the employer, as he must also pay employers' benefit contributions on behalf of each employee, together with any additional employer's pension contributions that may be made into the pension scheme for the employee. Returning to the employee from the previous example, the employer's benefit contributions for the week is $31. What is the labor cost to the employer for this employee? Okay, we have already calculated that the gross pay for this guy, the gross pay was how much? If you go back to our computation, the gross pay in total, the gross pay, this one, 308. Okay, the gross pay was 308. And then the employer's contribution, employer's contribution was, we are told, $31. So the total labor cost will become 339. This is the total labor cost. Now, accounting for labor. Okay, we have to know how to account for the labor cost. Labor costs are classified as direct or indirect depending on what cost those costs. Direct labor costs, all hours worked multiplied by normal hourly rate. Direct labor costs are the cost of the hours worked by the production workers who are involved directly in the business productive activities at the normal hourly rate. Indirect labor costs include overtime premium, idle time, sick pay, holiday pay. Indirect labor costs normally include the overtime premium for the direct labor hours and any idle time hours for the direct workers, as well as the indirect workers' employment costs. Okay, let's do this particular example together. Given below are the labor costs incurred by a manufacturing business for the week commencing 23 July 20x 5. Direct production workers, 1,000 hours at $6.40 per hour. Okay, direct production workers overtime hours 200 hours at $9.40 per hour. Okay, indirect workers 400 hours at $5.20 per hour. Indirect workers overtime hours 50 at $8 per hour. Of the hours paid to the direct production workers, 40 of these were idle time hours. What is the total for direct labor and indirect labor for the week? Okay, so let us just be systematic. Let's start by calculating direct labor cost. Okay, this would consider a direct production workers basic hours. Okay, the basic hours which were 1,200 as given here. Direct production workers 1,200. Okay, and also direct production workers overtime hours of 200, okay, plus 200. All right. Let us also see of the hours paid to direct production workers, 40 of these were idle time. So we have to deduct 40 and then multiply by the hourly rate of $6.40. So we get total cost of $8,704. All right, then let's move on to the indirect labor cost. All right. All right. All right. Just a minute. Okay. Okay. I'm sure you have noticed that we accounted for the basic element of the overtime in the direct labor cost, okay, the direct production worker basic hours. We also included the overtime basic hours there, but the overtime element is an indirect cost, okay. The overtime premium element is so overtime premium is an indirect cost. Overtime premium. Overtime premium. Okay. Okay. And the overtime premium is based on 200 hours. As usual, the 200 here, the 200. Okay. 200 hours multiplied by the premium. And the premium now, the premium is here. Okay. The premium is found here, the excess. Remember, the normal hour is 640. Okay. The normal hour is $6.40. So the premium is $9.40 minus 640. Okay, that's $3. So 200 multiplied by $3, that's 600. Okay. This one was done. So we are now at indirect labor costs. Okay. So we get 600 there. Then let's now consider the issues to do with idle time. Okay, because of the hours paid to the direct production workers, 40 of these were idle time hours. So let us account for idle time hours. We are told there were 40, but each hour is paid a normal rate of $6.40. So about 256 was for idle time. And idle time hours are also indirect labor costs. Then indirect workers, 400 hours at $5.20. So indirect workers are an indirect labor cost. Indirect workers, that's 400. Okay, 400 multiplied by their rate of $5.20, because we are told they worked 400 hours at $5.20. So if we use our calculator, we must get something like 2080. Then lastly, let's talk of indirect workers overtime hours, 50 at $80. So indirect workers overtime that's 50 multiplied by 8. and we get 400. We then have to add them up, and we get the total labor cost, indirect labor cost of 3,306. 3,336. That's the figure there. Okay. Right. We are having this complex question here. Okay. During the week ending 30 June 2023, the direct production workers in a factory worked for 840 hours in total. Of these hours, 60 were idle time hours and 100 were overtime hours. The hourly rate of pay is $8, with overtime hours being paid at time and a half. During the same week, the indirect workers worked for 120 hours at a rate of $6 per hour with no overtime hours. What is the direct labor cost and indirect labor cost for the week? And this is actually a typical exam question. So we also have to go systematic as usual. All right. So what is the direct labor in this situation? The direct labor cost should be direct labor. We are told from the question, the direct production workers in a factory worked 840 hours. So we need that figure, 840 hours. Okay, of these hours, 60 were idle. So 60 were idle. Okay, and the rate per hour was how much? These guys were being paid $8 per hour. So by the end of the day, the direct labor cost was 6,240. 6,240. And when you do this in the exam, when the examiner has been so generous that when you find one figure you are done, then automatically you just have to choose B and go home. Okay, just have to choose B and go home. But let us, for interest's sake, let us compute the indirect labor cost, because it's very important for us to know how this figure is obtained. Otherwise, if we do not do that, then there was no learning at all. So what happens is we just have to do it as usual. Okay. Indirect workers basic pay. Okay. During the same week, the indirect workers worked 120 hours at a rate of $6. So this one is just straightforward, 120 multiplied by 6, and we get 7. Okay, let us just underline this figure so that we are not going to be confused. 720. Okay, then direct workers overtime premium. The premium element is, always know this, the premium element is usually an indirect labor cost. Okay, so the overtime premium for this direct labor workers, the overtime premium, we are told 100 were overtime hours, 100. So 100 multiplied by the premium. Overtime was being paid at time and a half, and we are told that the basic hour was $8. So the half part is $4. That's 8 divided by 2. That's the half part. That's $4. So we can see that 100 multiplied by 4, that we get 400. Okay, the 400. Then let's now worry about the other element. I'm sure the idle time, we didn't talk about that. Yes, the 60 hour here. The idle time. Idle time for direct labor hours was 60 multiplied by the hourly rate of $8. So 480. We then have to add them up. We get a total of 1,600, and this is the figure here. All right, let's move on. They need to do that work. They need. All right, for interest sake, a business has a piecework system for remuneration of its employees. The system works as follows: $3.20 per unit for up to 40 units per week, $350 per unit for each unit between 41 and 50 units per week, $380 per unit for each unit over 51 units per week. That is a guaranteed weekly wage of $120 per week. One employee has produced the following amounts. It's just the same as we discussed before, okay? Because this guaranteed is usually the minimum wage. Okay, fine. Let us see what will be going on. What is the employee's gross wage for week 1 and week 2? Okay. Week 1 and week 2. Because in week 1 he produced this, and in week 2, third one. All right. It's fine. So we can safely say week 1, week 2, and underline. Okay, so in week 1, how many units? 35 units. 35 units multiplied by how much per unit? That's $3.20. Why? Why are we using $3.20? Because these units are under 40. Okay, so $3.20 per unit for up to 40 units per week. So this is why we picked $3.20. And we get a total of $112. Let us put a dollar sign here, 112. All right, then I'm sure for week 1 we are done. Okay, for week 1 we are done there. Let's move on to week 2. Week 2, they produced 44 units. Okay, they produced 44 units. So week 2, that's 44. $3.50 per unit for each unit between 41 and okay. So what it means is we have to consider the 40 separately. 40 at $3.20. Okay, so 40 units at $3.20, and we get 128. Okay, let's put a dollar sign again. That's 128, and then the extras, that's the extras from 40 to 44, that's 4 units are now being paid at $3.50. Okay, the extras are going to be paid $3.50. So if we do our computation, we get a $14 there. So we total up and you get $142. Now we are told that there is a guaranteed weekly wage of 120. So in week 1, as the piece rate is less than the guaranteed weekly minimum, the amount to be paid will be the guaranteed amount of 120. Okay, this is why I say that this is the minimum wage. Minimum wage. So if we produce anything that warrants a pay or a wage below 120, automatically we are going to pay the employee 120 because that's the guaranteed wage, minimum wage. Then in this case now, this employee is going to be given $142 because they've exceeded the minimum wage and they've exceeded and they've met the conditions which warrant them to be given such a higher salary. So we give them 142. This is the value to be paid. I'm sure there we are done. Let us move on. Okay, I just have to go through that and all right, just have to do the reading on your own. Okay, you guys just do the reading on your own. We have got the material there. Okay, you've got the reading material, so you just have to read through. The following data relate to work at a certain factory. Okay, normal working day, 8 hours, basic rate of pay per hour, $6. Standard time allowed to produce 1 unit, 2 minutes. Then premium bonus, 75% of time saved at basic rate. Premium bonus, that's 75% of time saved at basic rate. So what is the question then? What will be the labor cost in a day when 340 units are made? Okay, this one is a bit tricky. Okay, it's a bit tricky, but let us do it in a more systematic way. So let's determine the minutes first. So the minutes taken. Okay, standard time is how much? Standard time. The standard time allowed to produce 1 unit is 2 minutes. What about for 340 units? So standard time for 340 units, 340 units, that's 340 multiplied by 2 minutes, and we get 680. Then what about the actual time? Okay, normal working day has got 8 hours. So the actual time in a particular day, an 8-hour day, so that's multiplied by minutes. How many minutes in 8 hours? Because an hour is got 60 minutes, remember? 60 minutes, so 60 multiplied by 8, that's 480. Okay, minutes. Then what would be the time saved? Time saved, in this case, the time saved would be 680 minus 480, that's 200. Okay, that's the time saved. Now, with that information, we are told that the bonus premium is going to be 75% of time saved at basic rate. Okay, so the bonus is equal to 75% multiplied by the time saved, which is equal to 200. Okay, minutes. 200 minutes at how much per hour? Basic rate of pay is $6. Okay. $75% of time served at basic rate. So that's $6. Okay. That's $6. So how much do we get? We must get okay. All right. I'm sure you appreciate that this is per hour. Per hour. So obviously we have to adjust our minutes to hours. So we just have to to divide by 60. So 75% multiplied by 200 minutes over 60. Okay, so we get a $15 here. So let's put a dollar sign. That's the bonus. Okay, but the question is not asking us about the bonus, but it is asking about what will be the labor cost in a day when 340 units are made. So we have to proceed, we have to go a bit deeper. So the basic pay is equal to 8 hours, an 8-hour day. Okay, 8 hours, because the actual hours worked were 8 hours. So 8 hours, okay, multiplied by $6 per hour, and we get 48. So the total labor cost should be 63. Done. Okay, that one, do it on your own because there is an example there. Okay, increase in productivity. We talked about this. Okay, talked about that. Now let's move on to ledger accounting for labor costs. By the end of the day, we have to account for these things in terms of accounting language. So when we talk of ledger accounting, that's the double entry issues. We are referring to the double entry bookkeeping system, double entry issues. Okay, the gross pay is debited. We debit the receiver and credit the giver. The gross pay is debited to the wages control account, and the direct cost element is then transferred to work in progress account, whilst the indirect cost element is transferred to the production overhead control account. Okay, so the gross pay is debited to the wages control account. Okay, because remember, if we incur an expense, okay, the gross pay is an expense to the business. So it is absorbed, or it is received into the wages control account. This is why this account is being debited with the gross pay. Okay, and the direct cost element is then transferred to the work in progress account. Okay, you understand with an example. A business paid its employees. Net pay of $15,000 for week 34. This was after deductions for income tax and benefit contributions of $6,000. The direct labor element of this was $18,000, and the direct labor cost was $3,000. Write up the ledger accounts to reflect the labor cost. So what we need is to understand what would be going on. Okay, so the first step is to debit the wages control account with the gross pay, okay, which is made up of the net amount paid to the employees and the income tax and benefit contribution. So what we need here is to draw up the wages control account. Okay, wages control account. All right, so we have to debit this account with the gross pay, and we are told that the gross pay involves the just say bank, the net pay. I'm now tired, maybe. Okay, yeah. The net pay of 15,000, and then the payment to tax authorities, tax authority deductions of how much from the question. We're talking about the net pay here, as well as these deductions of 6,000. Okay. Then the other side of the entries are to the bank account for the net pay and to the tax authority creditor account for the income tax and benefit contribution, as these amounts must be paid over to the tax authorities shortly. Okay, then the direct labor cost is then credited to the wages control account and debited to the work in progress account, as were direct materials as part of the direct cost of making the product. The indirect labor cost is credited to the wages control account and debited to the production overhead control account together with any direct materials used. So what we need to do now to complete this wages control account, we then have to credit it with the work in progress. Work in progress of how much? We go back here. All right, the direct labor element of this was 18,000, and so with 18,000, which is going to be our work in progress, okay, and then the production overhead of 3,000. Okay, so that's 18,000, and then production overhead of 3,000. Remember, these entries have to balance. Okay. There we are done. All right. There we are done. We can also have these items in their separate accounts. Okay. The work in progress account, the production overhead account, using the information supplied. But for example, the work in progress account, WIP account can be having figures as let's say direct materials. Okay, it's debited with direct materials. Let's say the materials are 30,000, and then we would slot in our wages control figure, the wages control figure of 18,000. Okay, similarly, we can also draw the production overhead control account. Okay, all right, we can just utilize the other space. Production overhead control account. Control account. We can also slot in the figure by debiting this account with indirect materials. Let's say 40,000. 40,000, and then wages control for the indirect wages. Okay, and we take this figure, the production overhead value of 3,000, we slot it there. That's how you complete these double entries. But one thing you want to understand is by debiting, we are saying that the account is receiving or is increasing its expense. I'm sure you still appreciate that PO's acronym, which we touched on in our financial accounting module, the FA1 module. Okay, the PO's acronym, where we say that here we just have to divide them. All these purchases, expenses, assets. Okay, and then on this side we have got revenue, we've got liabilities, we've got share capital, etc. Okay, now we are still playing around the issues to do with expenses, assets, etc. So these wages, the wages control account represents the expense for wages, the account for wages. So they are increased by debiting. Okay, expenses are increased by debiting, purchases are increased by debiting, assets are increased by debiting. So whenever we incur an expense, we debit that account. Whenever we make some transfers, okay, let's say for us to understand it, okay, in this case, the credit side, for us to understand it in the costing sense, let us draw something here. Okay, let us draw something. Okay, let us talk things in a costing way. Let's say we buy materials from supplier. Then received to warehouse. Okay, then to production. All right, what happens is supplier account. The supplier account would show would debit cash because we paid him cash. Okay, so all right, he debited cash, he received the cash, and then credit materials or goods which is supplied us. Okay, he might be saying sales in his books, there will be sales. Then we receive in our warehouse, the warehouse account. The warehouse account receives the materials, so it debits materials. Okay, debit materials, and maybe it has to credit the requisitions for those materials. Okay, then when the warehouse transfers these materials to production, production receives, okay, receives these into work in progress. Okay, receives materials, okay, receives materials, so debit materials, and credits the work in progress. And so on. So you can see that when we are receiving, we debit, but when we are transferring now, let's say the warehouse now is now transferring. They've received this, but they want to transfer. So when they want to transfer, they have to debit, they have to credit materials. Okay, they have to credit the materials so that it is received in the production department. Okay, so when we receive, we debit, but when we now transfer, we have to credit the account so that another account receives it. This is why we come up with the PO's acronym. So at this juncture, it is now essential to understand that we only increase purchases or expenses or assets when we are debiting them. But when we want to reduce them, we have to credit them. So that's the movement that will be happening. All right, sometimes the movement occurs on this side without affecting this other side. We'll be playing here. We'll be doing all the issues there. All right. I think we have to do one last example on this part before we go to the last segment. And I just want to explain what will be going on. Okay, show the following transactions in the wages control account. On 31st May, gross wages calculated as 36,000. So calculated gross wages is 36,000. Deductions for employees' taxes were 8,000. Right? And then on 31st March, employers' payroll tax were computed as 4,000. And we are told that this side, the debit side, should be for gross wages. Okay, the gross wages. And the gross wages is made up of net pay as well as taxes and contributions. So the net pay, which was paid to the employees, is determined by, we are given the gross, so net pay is gross 36,000 minus taxes 8,000, and we get 28,000. This is why we're having the 28,000 here. That's the net pay. And then the taxes include this 8,000 and this one, so 12,000. Okay, then we then have to, as we did here, we have to credit with the work in progress account. The work in progress, this is the work in progress amount and the production overhead. So we just do the same here. The work in progress account 36,000. Okay, so the balancing figure would be the work in progress account figure again. That's the balancing figure. All right, because both sides should balance, should be equal. 40,000, 40,000. Okay, now we have to move on to accounting for overheads. Okay, and those other items you just have to read on your own. Accounting for overhead costs. By the end of this presentation, students should be able to explain the process of charging direct costs to cost centers and cost units and illustrate the process of cost apportionment for indirect costs, including reciprocal services. Reciprocal services, these are services which are offered by service cost centers amongst themselves. Okay, a cost center would be servicing another and so forth. Okay, would be offering services to one another. So we also have to be able to explain and illustrate the process of cost absorption for indirect costs, including the analysis and interpretation of under or over absorption. So straight away, we have to be able to define these. What is cost allocation? This is where the whole of a cost can be traced to a single department. Remember, these terms are usually examined, so you just have to be comfortable with them. Just have to know them by the heart. And then cost apportionment. This is where a cost is to be divided over several departments. Apportionments are done on a common sense basis. For example, heating costs are apportioned on floor area basis. Insurance of machines apportioned on basis of machine value or net book value. Rent apportioned on the basis of floor area. Canteen costs apportioned on the basis of number of people employed or using the canteen. All right, so we're having that example there. All right, a manufacturing business is 2 production cost centers, assembly and finishing, and 2 service cost centers, stores and maintenance. The following expenses are expected to be incurred in the forthcoming year. We've got indirect materials, assembly 13,500, finishing 8,000, maintenance 2,000, indirect labor, assembly 14,000, finishing 9,000, stores 20,000, maintenance 36,000, machinery depreciation 10,000, rent and rates 60,000, heat and light 15,000, power 18,000, insurance of machinery 8,000. You are also given the following information: the floor area in square meters 1,500, 400, 1,000, giving a total of 2,000. Power usage in percentage, net book value of machinery, that's 50 in $1,000. Okay, 50, 30, 15, 5, giving a total of 100. Okay, you then have to allocate and apportion the production overheads to the 4 cost centers. So you just have to do the apportionment. So we are given that information there. Okay, that's our solution. And we then have to know how to allocate and apportion. Okay, so indirect materials, okay, just have to allocate as they are. The indirect, this is the allocation we're talking about. Just have to take these figures as they are, the whole of them. Okay, so that's we've got 13,500, 8,000, so that's 18,500, 8,000. Indirect materials, okay, the stores does not need any indirect materials to be used for, the services of indirect materials, they're not required to stores, okay, although it keeps those materials, it takes custody of them, but it doesn't need them for it to function. Okay, so this is why we put a 0 here. And then maintenance, that's 2,000. So they give a total of that value. Then you go to indirect labor. You just have to take again these values as they are. And you can see that the stores department has got its labor, has got its workers. So this is why it was included there. It has got some cost there. and these are the figures. As you can see, these are the same figures. Okay, great. Then we then have to apportion expenses now. The expenses have to be apportioned. These ones have to be apportioned. And we are going to apportion using the suitable basis. For machinery depreciation, obviously we are going to use the net book value. Okay, we are going to use these figures. The net book value is to apportion. So we are going to subdivide this figure using the net book values as relevant, as you can see here. So these figures, the 10,000 is to be subdivided using the net book value. So, for example, for assembly, the 10,000 is to be split by multiplying 50 over 100. The 50 is this one. So 50 divided by the total, the 100 here. Okay, so 50 over 100 multiplied by 10,000, and we know the amount of depreciation that is to be allocated to the assembly department. We do the same for the finishing department. That's 30 over 100 multiplied by 10,000, and we get 3,000. Then for the stores, that's 15 over 100 multiplied by 10,000, and we get 1,500. Then for the maintenance, that's 15 over 100. Okay, that's 5 over 100 multiplied by 10,000, and we get 500. And the 5 we are talking about is this one, 5 over 100 multiplied by 10,000. We then move on to the rent and rates, and you can see that for rent and rates, the suitable basis is floor area, and we do the same as we did on top there. All right, so by the end of the day, you determine that the assembly department will be having the total overheads of 83,900, then the finishing 47,450, stores 46,600, and that one 43,550. All right. The following information pertains to Checkbutu Holdings. Okay, cost apportioned into preparation department were 61,494. Cost apportioned into assembly department were 40,906. Okay, and we are given this information here. You are required to recalculate the overhead absorption rate and amount to be charged to each product using a labor hour basis. So we are going to use the labor hour basis. So which means we are going to ignore this, the machine hours. We're going to ignore them for now. Okay, so we then have to move, because in the exam there are no chances to waste. Okay, there's no chance to waste time. So what was the total budgeted labor hours? Okay, total budgeted labor hours in preparation department. Okay, this preparation department was how much? Let us this one is given by for product A, that's 10,000 units multiplied by 2 hours per unit, and we get 25,000 hours. Then for B, for product B, that's 6,000 hours, and 6,000 units multiplied by 1 hour per unit, so that's 6,000 multiplied by 1, and we get 6,000. So if you add them, you get 31,000. So the overhead absorption rate should be budgeted overhead divided by budgeted activity. So budgeted overhead for the preparation department was budgeted overhead was 61494 divided by 31,000, the budgeted activity. This is the budgeted activity, okay, the 31,000. So you can see that the overhead absorption rate was $98. We do the same. The total budgeted labor hours for the assembly department, you can see that for product A, okay, let us use the other area. Okay, total budgeted hours, okay, for assembly. Let's say product A, 10,000 units multiplied by the 3 hours per unit, so we can see that there are 30,000. Then product B, 6,000 units, and they require 4 hours, 24,000. So you can see that total labor hours budgeted were 54,000 hours. Then the overhead absorption rate would be, budgeted overhead was 40,906 divided by 54,000. So you can see that the overhead absorption rate was $0.76. Okay, now with that information, we can now determine the amount to be charged to each product using a labor hour basis. So for example, product A would cost 2.5 hours here, multiplied by $98 plus, so these are the hours for the preparation department. Okay, these are the hours for preparation department, the cost for the preparation department, and the cost for the assembly department. Assembly department requires 3 hours, 3 labor hours, 3 multiplied by $98. Sorry, for the labor hours, for the assembly department, that's not it. Okay, for the assembly department, that's 0.76 for the assembly department, sorry. Okay, remember this is an overhead absorption rate for preparation department, and this one was for assembly. Okay, so what happens is we then have to find the total there, which becomes $7.23. We then do for product B. Product B requires from preparation department requires 1 hour, Okay, whereas just 1 labor hour multiplied by $98 plus 4 hours multiplied by 0.76, and we get $5.02. Then we are done. Now we are now left with the issues to do with over and under absorption. Okay, over and under absorption. All right. An overhead absorption rate is calculated usually per hour, per labor hour, or per machine hour. Overheads will be charged back to production using the same basis as used to work out the absorption rate. Okay, it is important to understand that overhead absorption rate are calculated in advance on the basis of budgeted cost and budgeted output, because a rate is needed from the very start of the period, and only budgeted amounts will be known then. The predetermined absorption rate is then never adjusted retrospectively. This will usually mean that the actual fixed costs are not properly accounted for, and that a final adjustment is needed in respect of under absorption when not enough fixed costs have been accounted for, over absorption where too many fixed costs have been accounted for. Okay, and you have this information with you. Okay, let's, for example, budgeted fixed costs were 100,000 and budgeted output, budgeted fixed costs were $100,000 and budgeted output was 50,000 units. Therefore, fixed overhead absorption rate is equal to $2, which is given by 100,000 divided by 50,000. Okay. Actual fixed cost is equal to 120,000. Actual production units were 53,000 units. Here, the 53,000 units produced will each absorb $2. That is $2 multiplied by 53,000, and we get 106,000 of fixed costs, which would be accounted for in the cost of production. However, actual fixed costs were 120,000, so the cost has been under absorbed by 14,000. Why? Because the actual were 120, but according to the budget, according to our budget, the overhead absorption rate, it produced 106,000, which were only accounted for. So we under budgeted, we under absorbed. So the cost have been under absorbed by 14,000. The actual was 120,000 versus the budgeted 106,000. So there was an under absorption. Okay, and a deduction of this amount has to be made from the profit. When we under absorb, it means that we under accounted for expenses, so we have to deduct the extra from the profits. Similarly, if the result had been actual fixed cost 95,000 and actual production 49,000 units, here the 49,000 units produced will each absorb $98,000 of fixed costs, which would be accounted for in the cost of production. However, actual fixed costs were 95,000. So it means that we have over absorbed by 3,000, and 3,000 has to be added back to profit. We had over absorbed, so the extra should be added back to the profit. That's the trick there. So please do not be intimidated with this costing area. Okay, just feel comfortable and excel. I want you to shine in your assignments. I want you to do all these questions so that you are comfortable with everything that may come in the exam. So these questions are there for you. All right. I'm sure we are done. May the good Lord, may the good Lord bless you people, because you're wonderful people to me and the community. Because when you are informed, when you are knowledgeable, you become useful to the community and the country at large. The country would be very, very proud of you. So I want you to do the assignments, and please